So good morning, everybody. I hope you are well. So continuing on our previous discussion pertaining to the forex market and what drives the forex market, and these, as I've mentioned before, these videos are mostly for when you want to trade the CFDs, which is contract for difference, meaning that you are going to trade in your own capacity, meaning that you are going to assume all the risks, right? But these videos are to be able to enable you to mitigate those risks, to help you to beat the market in terms of trading, all right, and how you're able to capitalize off the events that transpire on the economic calendar and also the events that actually transpire pertaining to the news and how you can mitigate those risks and you can generate your potential profits, all right? So we're still touching on the basics, all right, principles that drive the forex market, okay, which is the foreign exchange market. And what are the benefits of trading forex? So the benefits are it's the lowest margin that is required. So meaning that when you fund your trade account, for example, let's say that you have you want to go ahead and trade, you finish play on your demo account to see how the market moves, and now you fund your trade account, right? So to get you started, because there are a lot of instruments that are much more volatile, that are volatile in terms of the market and the movements, more or less the same as forex. However, as I've highlighted in my previous video, there are forex pairs that are you are able to sustain, like hold those positions, and it won't be how can I put this? It won't be that the movement is not that drastic in terms of other forex pairs. Okay, like you get exotic forex pairs, there the movement is much more volatile, and you can potentially wipe out your account. All right. So if you're trading like GBP USD, for example, the British pound against the US dollar, the possibility of you liquidating your account is very slim to none unless you have not followed the right steps in terms of managing your margin correctly, which is your balance in your trade account, opening a correct volume and lot, then you can liquidate your account depending on which way the market moves and according to the economic calendar and the data that is being released. All right. So what are the benefits of trading on the forex market? So it's the lowest margin that is required. The daily updates, there are daily updates. So the forex market is open 24/7, right? So let's just say, for example, you want to make a certain amount of money at a particular time. You don't have to wait for the market to be opened, right? You can go in and scalp and trade, and you can close your position, and you are able to withdraw your funds, and it goes back into your bank account, all right? Now, what you need to do is you need to bear in mind there are a lot of brokers that are out there that are a little bit dodgy. So you've got to make sure that you do your due diligence. Just make sure that you go ahead and see which broker is regulated in which country. It's going to give you all the regulations like the FCA. In South Africa, we have the FSCA, and there's CISEX, there's Essex, there's different regulations from around the world, right? So the more regulations the broker has, the potential for you to get your money back is much more higher as opposed to these other dodgy ones, all right? So the other benefits is that you can buy or you can sell, okay? So you can make potential profits of the buy or the sell of the market, right? So the ups and downs. So you can open a position on buy. So let's say now you've done your homework for that particular day. You went on the economic calendar. You saw that the market is trading in a buy position. So you open your position on a buy and then you close your position. So you can also open a position on sell as well. All right. And you can make profit from there as well. Now, it's a very lucrative and liquid market as well. So approximately 7.5 trillion was traded in value per day in 2022. So that is in 2022, all right? That is just coming out of COVID and things like that. So this is traded on a daily basis because, as I've mentioned, countries and currencies, they go together. So this is traded each and every single day on the financial markets. The forex market is a very, very lucrative market. And I'm giving you information with how you can go about beating the market, right? Beating the events, beating and going against what actually happens on a day-to-day basis in terms of the news. So you're able to make that news work for you, and you are able to incorporate that in your open positions, and you're able to generate your potential profits or losses, because it does happen like that, based on what is transpiring around the world. Okay. So, what are the indicators that is going to drive the currency pairs according to the economic calendar? So, it's going to be your NFP data, your CPI, it's your consumer price index, it's geopolitical events such as elections, countries declaring war on each other, um, presidents that have scandals on their names, and then an election takes place and then they elect another president. That is what actually happens, all right? The governor of the Reserve Bank that is speaking, so I think in the States it's a Federal Reserve, the Federal Reserve, that is what you call it, and President Trump's tariffs, all right? Now, the tariffs, we know that it's been a very taboo subject, right? Many people hate those tariffs, but in terms of the forex markets, it's like a gold mine, okay? The reason is because, as I've mentioned, countries and currencies, they go together. So if Donald Trump, for example, is stating that he's going to put tariffs on China, now what you're going to do is that you are going to either go and look at the information, you're going to look at the technical data, and you're going to trade against the US dollar. Now remember, I've mentioned to you, when you're trading the US dollar, you're also going to open a position on gold, because the US dollar and gold, they have a direct correlation to each other, okay? So if you open a position on the US dollar, let's say you are moving, the market is moving, and according to the technical data, now you open a position on sell. So maybe you go to GBP USD, for example, you open a position on buy. So what you're doing is saying that you are betting that the GBP, the Great British Pound, is going to trade much more higher against the US dollar for that particular day. Then what you're going to do is now, so you've opened buy on the British Pound, and then you've opened sell on the US dollar, right? So you're saying that the US dollar is going to trade weaker, right? So what you're going to do is then you will open a position on gold, and then you will open a position on buy. Because remember, as I've mentioned in my previous videos, if the US dollar is trading weak, then gold is going to be high, and vice versa, all right? So remember, now the tariffs, what they do is that even though it's going to affect businesses, however, it's very lucrative for the forex market, right? Meaning that the forex, if you are someone who trades forex, it means that it's going to trade higher, and the commodities as well is going to trade higher, because why? There's going to be an increase for supply and demand in terms of commodities, okay? And we are going to unpack now why those why that data is actually important, okay? So when you're looking at the CPI data, there are factors that are incorporated in terms of that, right? So you got your government spending, okay? Then you got consumer spending, then you got imports and exports, and total investments, all right? So this is what actually comprises of CPI data, and this is actually what, not CPI, GDP data, and this is what is going to make up the gross domestic product of that country, right? So it's going to determine whether there's investor confidence in that particular country. There's many factors, right? So I'm just going to unpack it, okay? So in terms of government spending, so what you do is it's going to be bonds, interest rate. So that is what more or less will be affected, or how the market is going to move in terms of this. I'm just going to unpack a little bit in a few minutes, okay? Then we have consumer spending, which is also again the interest rate risk. Then we have imports and exports, which is going to be tariffs. And then we have total investments, which is Moody's, okay? The rating agency, which is very important because why? It is going to affect your government, your bonds, okay? Your government bonds in terms of those who have government bonds, those those institutional investors, those investors who have bought government bonds, all right? The interest rate is going to play a major factor, all right, in terms of that, because if the interest rate is too low, then the potential returns of the government bonds is also going to decrease, all right? Now, how do you affect the returns of government bonds? Political unrest, downgrades from Moody's or Fitch or one of these rating agencies, okay? So that is going to affect like let's say for example, so we've got USA and we've got China. So I'm not exactly sure who is buying predominantly most of the government bonds, but maybe I would just, let's just say for example, hypothetically speaking, it's China, okay? Or maybe it's one of the Arab countries, okay? Now, let's say President Trump has a very good relationship now with these countries, all right? Now, to cause political, now this is all hypothetical, guys. This is all my information. Remember, I'm not an expert in the market. This is what I've gauged. This is what I've learned. Okay, I have studied a little wealth management as well. I never finished my degree. However, um, I've also got a lot of training in terms of on the job market, in terms of CFDs, and I've also seen. So I use my wealth management. Education together with the trading, and I incorporated both of them, and I was like, hey, and I've also worked in the banking sector as well, in vehicle and asset finance management. So I worked there as well. So I saw that there was, there's a lot of things that actually work together. So in terms of how would you affect the relationship, right? Or the affect the let's say no, let's not talk about the relationship. Let's talk about how you would affect the return of government bonds. Okay, so that would be by causing maybe a political unrest, right? So that maybe this is now where the rating agency steps in, and now they downgrade the country. Okay, they downgrade the country because of political instability or maybe because of certain events, right? And now, which means that it's going to have a direct correlation in terms of the returns of the government bonds, okay? Because you must remember, those who have government bonds, they get a return each and every single, they get returns, okay? So if they are downgraded, if the country is downgraded because of political unrest, it's going to affect those returns as well that those countries are going to receive, or those investors that are going to receive, okay? So there are many, many ways that to skin a cat. There are many, many ways. Even in the financial markets, there are many, many ways to do certain things in order for a country to, I don't know how to put it, in order for a country not to actually go against what, let's say, what President Trump is doing, because now he's got a lot of investment, right? So the only way now to counteract that would be to do exactly what I've mentioned, right? Because the tariffs are working. So the thing is, yeah, it's a very tricky thing. But as time goes on, if you are someone who learns to trade, if you are trading, then you are going to understand the market. If you do your due diligence, if you go ahead and see, that is why I've said that before you start trading and you learn about technical indicators, you must learn to understand the background of the market so you're able to beat the market and you're able to trade from an informed perspective. Because what is going to happen is the psychology of trading will get to you. So you will open a position and you don't understand what is driving the market. Just because someone has said buy and sell. You don't know why you're buying and sell. Why are you buying and sell? Why are you buying? Why are you selling? You don't know. You're just going according to what they have given you these signals. You need to understand why do you buy and sell so that when you are trading and if you do open a position and the market moves against you, then you understand, okay, this is what happened. Then you are able to, the next time when you're able to open a trade, what is going to happen is you are going to watch that, and maybe you will scalp, or maybe you will trade differently, you see. So GDP measures the country's economy. GDP increases when the country's exports um, exceed the imports. All right? Isn't that what President Trump is doing? So he declared tariffs on everybody. All right? All the countries around the world. Now remember, the thing is with tariffs as well, it's a very finicky and touchy thing because when it goes on the market as well. See, the market is not so susceptible to a long-term unrest, right? So if things need to happen, it needs to happen quickly. And for example, for me, right, I would take into consideration countries that have a strong financial background, the GDP. I wouldn't say GDP, but there are also ways as well that we go ahead and look, like when you're trading the indexes, all right? You are able to determine which country is in terms of that data. This is also what I've learned. Okay, I stand to be corrected, but this is my information. This is my things that I have learned along the line. So I go onto the indexes, right? Then I would be able to see this, the way that it's trading, and according to the indexes and the way that it's trading, the candlesticks, the movements. Then I'll be able to tell you, okay, this country, the data, this country, the information that they're giving, it doesn't seem correct. So even on the economic calendar, maybe they are, I wouldn't say manipulating, I would just say maybe they're reporting on data that is a bit contradictory to the technical indicators of what is actually transpiring on the indexes when you do go on there, right? So that is how you're also able to determine which countries' currencies or which country's economy, let's say that, which country's economy is a little bit stronger, all right, as opposed to other countries. We can take that fundamental data and we take the technical indicators, and what we do is we have a look and we see. So we take the economy, you take the fundamental data, and then you go to the technical indicators and you see, and you're like, hey, something doesn't add up here. So also inflation may also rise due to the demand or a reduction in supply. Okay. So as I was briefly mentioning, so yes, the tariffs. What you need to understand is that a lot of things have transpired over a couple of years. It doesn't happen overnight, right? So in order for the economy to see certain results and see the rewards of what is actually happening, it's not going to happen overnight, because you must remember what happened in the States, it took some time. And the way that everything was done, whoever done it were very learned and very smart. And the only way that you were able to do that, to counteract it, was through tariffs, right? But now I'm sure they also had a way, when they knew that President Trump was going to declare tariffs, they already knew what they were going to do, so that whenever he does that, they're going to do that. Whenever he does that, they're going to do that, right? So, in order for, as I've mentioned, in order for the government bonds to be affected, the only way now is to affect that interest rate, and that would be also by downgrading the country's status, right, due to political unrest, potentially. Let's just say allegedly, potentially, because I don't know. I'm not working for the government of the USA. Neither do I get information there. All the information that I'm getting is all public information that you are able to get on investing.com. It's also fundamental information, watching the news, and also gaining that, gauging all that, and putting to and 5 together. I won't say 2 and 3 because I don't know. I don't want to assume. But from what I see, I'll just provide my 2 cents and we'll see what happens. So the rating agencies, okay, and the impact of investor confidence has a direct correlation with whether or not a country's government bonds are worth the investment or not, all right? So the country's economy, like I've said, is worked on the investor confidence. It goes according to GDP data, which is government spending, consumer spending, imports and exports, and total investments as well. And now to counteract those so if now there is a lot of investment that is coming now, like how we see that President Trump has got a lot of investment now to counteract, to actually bring down that debt, the only way maybe potentially to counteract that, to frustrate the institutional investors, all right, is with, even if they don't want to drop the interest rate, to affect the returns would be downgrading the country, um, which is with the rating agencies. Okay, let's just hope that it doesn't happen. All right, because the last thing we need now is for President Trump's hard work to go down the drain. I stand to be corrected because there are many people that are on who are traders, who are investors. They've all got different perspectives. Okay, because everybody has a different, even when you watch the news as well, one trader will say that, one trader will say that, or one asset manager will say that, one asset manager will say that. Okay, it is different. And when it comes to opinion, everybody's opinion could be valid. It's good to listen to different opinions so that you are able to, draft your final conclusion. Okay, because sometimes you are able to see, sometimes the other person is able to see things from a different overview. So to take away investor confidence from a particular country, all one needs to do is downgrade their ratings to, let's say, for example, junk status. That is what actually happened in South Africa as well. So the South African, our government bonds, we used to offer the highest returns in terms of government bonds. Okay, and this is also to raise money to fix public or state-owned enterprises. Okay, so what they done was now to take away that investment. All right, what do? They downgraded our country to junk status, which means that the investors or the institutional investors that had investments on government bonds, meaning that they saw, okay, the investor confidence is no longer there, so what they're going to do is they're going to retract their investment. All right. And however, the government bonds is different because investors, it's over a different period of time. Okay. So it's over a period, maybe, let's say, for example, of 10 years. Okay. So they've got to hold that for 10 years. It all depends. All right. Now, what would be the recourse um, in terms of that? Okay, do you increase the interest rate potentially so current investors get higher returns? All right. What do you actually do? So that is why, as I've said, the Federal Reserve or the governor plays an important role in terms of monitoring the move of money and ensuring that there's a steady flow of cash within the economy, because there's many factors that are involved in terms of the investment component. Okay, now factors to cripple an economy: higher imports, okay, meaning a potential higher trade deficit. So also you got to bear in mind that there is going to be a deficit in terms of the trade balance, but it doesn't need to be substantially high. All right. Unstable government. Remember, your currency derives its value from the government data. So if your government data, they are always having this event or that event that is going to affect and it's going to cause volatility on the currency, it's going to also affect the ratings, okay, from from a government bonds perspective. Okay, hyperinflation, printing money that you don't have, right? So as I've mentioned before, to solve the problem now, what you want to do is you want to print money, but you're printing money that the country doesn't have. That is what causes hyperinflation. High unemployment rate. So the cycle of high unemployment, it it's it affects everything. So I'm just going to explain and briefly touch on this, all right? So let's say, for example, there was a 40 to 50% unemployment rate. What it's going to do is the governor or the Federal Reserve is going to look at the unemployment rate, the unemployment data, okay? So they've got to go back and they've got to see, okay, what do we need to do in order for us to be able to keep the commercial banks going? Because why commercial banks play a pivotal role in terms of the economy and provides credit and keeps businesses afloat. It keeps the country the country's economy steady, and also has a direct correlation, as I mentioned, to the forex market as well, because why, it's got to do with currencies. Okay, so would the government have to now increase the interest rate because why, of a high unemployment rate? All right, the reason because of that would be um, there's less taxes flowing within the economy. All right, so because there's a high unemployment rate, there are less people that are paying tax. Okay, and this is also, so it's going to affect, it also has a ripple effect as well in terms of public servants. Okay, because why, public servants get paid from the people's taxes. All right, so it's going to affect your policing, which means that you'll see that crime is going to go up, and there is going to be, it's going to affect the rate at which the military is going to be able to um, employ people. It's going to affect the country in that way as well. Okay, so what do they do? So that they, in order for the country to raise capital, they 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 have the government bonds, right? And these are to fix the state-owned enterprises. Okay, so it's to attract investors. Okay, now public enterprises are enterprises, for example. If the government now, let's just say, for example, because now they've got to pay salaries from those taxes and all that. So another way is to raise money through the government bonds. Okay, and a good interest rate is what is going to attract those investors, right? So the government will then put the government bonds um, on the market for the institutional investors to invest. Okay, and to buy those government bonds, and then this in return is going to fix the state-owned enterprises. All right, so commercial banks, also another factor. Okay, commercial banks lending decreases. So this has got to do now when there's a high unemployment rate. So if the commercial banks now lending decreases, because why, you have to be employed or you have to be self-employed in order for you to meet the criteria, in order for the banks to assist you, because you've got to be able to afford to pay your mortgage back or your car back, or you've got to be able to afford to be able to pay the particular installment, right? So now what is going to happen is the lending will decrease. So now the Reserve Bank has got to look at all these factors, and then hence they've got to increase the interest rate, all right? But now what is going to happen is it's going to affect your food prices. Your food prices are going to go up, all right, potentially. So small businesses will be affected because why, consumers are less likely to spend. The housing market would be affected as well because why, people are going to be less susceptible to purchasing with a high interest rate. Okay, so why is oil important? Okay, why is oil important in terms of inflation, to help counter inflation, right? Because if your interest rate goes up, To counter that, you're also going to need other factors in place to help regulate, to help bring down the food prices, okay? So to help counter inflation, on the economic calendar, what we do is every Wednesday there is oil inventories, okay? And they update it every Wednesday. The report is normally released about maybe about 3:30, and that you are able to open a position potentially in oil. Remember, oil is volatile. It is a commodity, so meaning it's going to be you're going to trade it in a different capacity. So the volume of loss of forex pertaining to oil is going to be a little bit different, right? Because you're trading on the whole value of oil. Okay, so every Wednesday it's updated. So oil has the ability to retrace every 4 to 6 weeks. Now I stand to be corrected, but this is according to my data, meaning that if you have a position on oil, for example, let's say for example now the war was declared. Now the oil ended, you had a position on buy, for example, and you opened a position on oil, and now because of the war that has been declared, the oil went in the opposite direction. All right. Now, what I'm simply saying is that instead of you closing the position on a loss, for example, okay, what you could do is you could top up your account. Now, this is not carved in stone, this is according to me. You could top up your account, but you have to do your due diligence. You got to check the technical indicators. You got to check the fundamental data, what's going on, because why? It does move with contracts, all right? And the oil inventories, what happens is they're going to see how many barrels of oil is there, and that is what is going to determine the supply and the demand, right? So you are able to hold that position, meaning that every 4 to 6 weeks potentially the oil price has the ability to go down or go up, right, depending on what transpires. Okay, so you need oil to transport goods and services. Okay, so remember now, when you are having tariffs, when you are having imports and exports, all right, if there's a lot of imports, what is going to happen? It's going to increase the transportation industry. There's going to be a demand for oil, all right? And what is going to happen is it's going to counter the prices of the food prices, okay? So guys, sometimes it can be very, very confusing, especially if you're someone who is just learning. Remember, all these things tie together. They all go together. So if the price is kept somewhat stable, it could aid in keeping inflation at bay. So meaning that it can keep inflation steady. It's not going to remove the inflation. It's not going to really counter the prices of the goods in the store. It means that your groceries would increase. However, when if the oil price is monitored, it can reduce that inflation by a certain margin. Okay, so oil is liquid gold. All right, I'll just leave it at that. And oil and currencies go together. This is my opinion. Oil and currencies go together. So if you know, you know. Oil and currencies go together. If you know, you know. So remember the currency pairs that are most popular, all right, in terms of the market and what it is that you need to trade on if you want to consider trading on the forex market. Okay, it would be the Euro USD, the Great British Pound against the US dollar, and the Japanese yen, and the US dollar and the Canadian dollar, right? These are more, and the Australian dollar versus the US dollar. So these are more popular currency pairs that are traded by the traders who trade forex. Okay, these are a little bit more stable in terms of the market. They are able to generate potential returns or losses, like I mentioned. Okay, so let's say, for example, okay, now if I was, let's just say, declaring tariffs on countries, okay, now what I would do in terms of the countries that I would include. Now this is from my perspective. I stand to be corrected. Like I said, I'm not an expert in the market. I don't hold anybody's portfolio. I'm not an asset manager. This is what I've gauged and what I've learned, right? As time went on in terms of the forex market, in terms of the financial market. Okay, countries with a stronger economy, right? And this is what I've learned. I've went to indexes and I've also correlated the fundamental data and the technical indicators, and I've put two and two together, and I'm like, okay, this is how it goes. So it would be the USA, which is now the currency that they use is the US dollar. Then we have France, who uses the euro. Then we have Germany, who uses the euro. Then we have Australia, who uses the Australian dollar, and we have Great Britain, which uses the Great British pound, and we have Japan, which uses the Japanese yen. Now, I have not included China, and that is for a particular reason, right? So if you notice the currency pairs pertaining to those particular countries, all right, it correlates with the countries that I've mentioned, all right? So the countries with the strong with a little bit of a strong economy in terms of the data that they provide, then you will look at the stability of the country's currencies, right? Then you'll be able to see that it correlates with each other. So remember the currencies that I've mentioned is the euro, the Great British pound, the US dollar, the Australian dollar. Okay, you can also include the Canadian dollar if you want to trade the Canadian dollar, okay? But the countries with a more stronger economy, like I've mentioned, is the USA, France, Germany, Australia, Great Britain, and Japan, okay? Now, and we will discuss the indexes pertaining to those countries in about maybe 3 videos time, and why I have stated those respective countries, okay? So guys, I hope you find this video informative. If you want to see more videos like this on how to beat the market in terms of trading, trading from an informed perspective, so that you're able to beat the market despite what is actually happening, and you are able to capitalize off events that are happening in terms of the instability, so that you are able to trade forex and capitalize off what is going on in terms of the geopolitical events, right? So, guys, please like, share, comment if you would like to me to touch on other, if you want me to go deeper on certain subjects. I know sometimes it can be a bit confusing. Also, if you are able to keep this channel going, because remember now, I would appreciate even if you're able to donate anything. I'm all the way in South Africa, so we work with rands. So if you're able to donate so that you can keep this information going on how to beat the market, because as I've mentioned before, there are many videos about technical, telling you what to do, but you don't understand why you are doing it. This is why I've created this, so that you're able to understand why, right? So thank you for your time, and I appreciate it. Enjoy the rest of your day. Thank you. Bye.